So I'm about to show you my second ever investment property that I got for $0, meaning the bank completely financed the whole thing. And not only is this a completely free house that I had to put up none of my own money, this house is now going to be making me an extra $50,000 a year of income in my pocket, plus paying the house off by itself over the next 30 years. Now, I know this sounds way too good to be true, but hear me out, because this is something that you guys can do too. But you got to be a little bit creative about it. Now, if anyone who doesn't know, I live in Australia. Okay, New South Wales, Australia can easily be considered one of the hardest places like in the world to get a good return on real estate. Simply because we have things like stamp duty, which is a massive tax you got to pay every time you buy a new property. We don't have the 1031 tax deferred exchange like they do over in America or USA. So we have to pay capital gains tax every time we buy and sell a new property. So even if we even if we sell the property to go up into a bigger property, we still have to pay capital gains tax. So, and you know, a common investment property in Sydney would be worth about $1 million, and you're only getting $600 a week in rent. Now, even with that rent getting added to covering the mortgage, it would still be costing you an extra $20,000 a year to keep that rental property. Now, you may be getting that in capital gains, but I don't like that at all. I want my property to be paying me each and every month. So how am I getting such an amazing return on a property in New South Wales? Well, there's a lot of creativity that comes behind putting together something like this, but you guys can do it too. It's not that hard. So let's get into it, okay? I bought this property about an hour up from Sydney, up the coast. It's about 5 minutes from the water, 5 minutes from shops and restaurants and stuff. So this house was fully financed by the bank, which means I pulled out equity from another property that I fixed up, built equity in. So I pulled out that equity, used that as a deposit to buy this house. So it was costing me nothing out of my own pocket to finance this house. There was no deposit I had to put down because it all came out of equity from my first house that I bought. So this property I bought up the coast, I paid $450,000 for it. It's a 3-bedroom house, and it's on about a 600 square meter block, single bathroom. And this place would rent for about $400 to $450 a week. Now, because it's in a coastal area and you know it's near the shops, near the water, I stick it on Airbnb and get, even in the off seasons, you know, a pretty consistent $1,200 to $1,300 a week, minus the cleaning fees and stuff, which is all on autopilot. So the cleaners get, you know, notified through Airbnb when they need to go there. I don't have to deal with it or touch it at all. I don't have to be there. They go and clean. I'm making about $800 to $900 a week in profit. And that's in the off season too. That is just, you know, very consistent, regular income even now. Now that's a pretty awesome return to get on a $450,000 house. So if I was just to leave it like that right now, I would be getting a cash flow of $24,000 a year on top of that Airbnb income, paying off the mortgage and paying all the bills around it as well. Compared to if I was actually renting it for $400 a week, I'd actually be losing $1,700 a year. That's how much it would be costing me to keep that property with the renter in there, because I'm only getting $400 a week. And that's $1,700 a year out of my pocket. That I don't like. I don't think you should be getting into rentals to lose money like that. Sure, you're getting the capital growth, but you want to be getting that sweet, sweet cash coming in from the rent as well. But remember, we have to get more, because I said I'd be getting $50,000 a year on top of paying the mortgage, not $24,000. So have a look at these plans that we've drawn up right here, okay? These are plans for a second dwelling to be put on this property. Around the back of the property, it'll still have a private driveway and everything. It'll be like 2 separate properties. Now, the important thing if you're going to do this is you get the right zoning, you get the property in the right area. You need to make sure you're going to get compliant approval. That's very important. You don't want to have to get a full DA approval, because that can cause a lot of headaches. With compliant approval, no one can stop you from putting that second dwelling on there, okay? The neighbors have no say in it. You have every right to put it on there. It can't be stopped, okay? So as long as you're not in a bushfire zone or flood zone, you can get compliant approval most of the time, but check before you do it, obviously. And I'll be spending $147,000 on this second dwelling, and it's getting done by Granny Flats Australia, and it's completely financed by the bank as well. Now, after having both of these units on Airbnb, once it's all said and done, my total mortgage is now going to be, including the granny flat, it's going to be $600,000 with a conservative rental income from Airbnb of $7,000 a month in profit. And that's from both of the units. Now, this gives me a total profit, extra $54,000 in my pocket each year just for having this property. Plus, it's going to be paying $29,000 a year towards the mortgage, and with a principal pay down of $12,000 a year off the total amount that I owe. So for a property that I basically put no money down to set up, fully financed by the bank, I'm now getting an extra $54,000 a year in my bank account for me to enjoy and do whatever I want with. Plus, that property is looking after itself, paying all the bills, paying all the mortgages, paying everything. I don't have to worry about it. That's a pretty good deal in my opinion. That's what you want to be looking for when you're investing in property in New South Wales, Australia. It's a bit of a headache to try and organise everything, but you know, it's a pretty good return at the end of the day. So there's a bit of a look at my second ever property that I bought. I hope you guys enjoyed this interesting perspective, you know, how I'm sort of structuring my real estate deals over here in Australia, and I think it's pretty uncommon to see something like this. And yeah, I think it's definitely possible to do something like this over in Australia. I used to always think about it the wrong way. I was looking at every other investment property and how little return. It wasn't real exciting for me. But now when you put something together like this and you're getting such massive cash flow, it just becomes so much more, you know, so much more. You want to do it a lot more, that's for sure. You got a lot more motivation to do something together, to put something together like this when you're going to get such a big payout. So hope you guys enjoy my perspective. Hope you liked my second property. Let me know if you want some more information on it, how you can find one of these yourself. Just leave a comment below. Let me know if you like this video. Thanks again for watching, guys. This is Marketing Johnson, out.